Hello and welcome to CNBC TV 18's Mumbai Newsroom. I'm Sumaira Abdi and you're watching Your Stocks. Our two experts today, we have Ruchit Jain, who's the lead research at 5paisa.com, and we also have Shahina Mukadam, an independent market expert, who will be answering all your stock queries today. So thank you very much, Ruchit and Shahina, for joining in. The first query today comes in from Hyderabad, and on the line we have with us Mr. B. Santosh. Hi, Mr. Santosh. Good afternoon. How can we help you?
Good afternoon, ma'am. Thanks a lot for calling me. I have got a doubt with recent purchase with Kaveri Seeds script. I purchased 100 shares during 25th July at the price of 484 rupees.
Okay.
Later, actually, why did I purchase? The reason is that their Kharif sale was very good. Their first quarter results were excellent. So I thought that from now onwards, since it is basically a seasonal company, so I thought that the stock will, the price will appreciate. But it went down from 484 rupees to 420 rupees. And now it is picking up slowly, and it has come up to the level of my purchase value, approximately around 484 rupees. Yesterday, the news
Understood.
you might
So you want to know now what you should do with it?
What should I do now?
Okay. Shahina, first.
Hold or to sell.
Okay, understood. Shahina, first to you. He's just about breaking even now. Should he remain invested?
Yeah, I would suggest remain invested. The company has announced a buyback just recently with a maximum price of 700 to be bought from the open market. Also, I think even in terms of fundamentals, the company is very strong. So one can continue holding now. Please review it, maybe closer to 550, 600.
Okay, by the way, those are Maruti's earnings that we are getting in. The standalone revenue has come just in line with our estimates at a little over 29,000, which means it's a 44%, nearby 44% rise on a year-on-year basis. The standalone net profit as well is looking good at about 2,700 odd crores, which is again bang in line with what we had expected. So it was supposed to be a strong showing this time around because of a low base and also a demand recovery that we have seen. Again, very strong volume growth we had seen in the second quarter as well. Volumes had to rise YOY and QOQ. So on all these parameters, it looks like the numbers have come bang in line with what we were expecting. It was supposed to be a strong quarter, and that is exactly what the company has delivered. 2769 crores in terms of the EBITDA as well is looking very, very good. Sonia is here with us. Sonia, are you happy?
Oh, this is a good set of numbers. I mean, it's largely in line with expectations, right? There are no real surprises. The margins were expected to improve. The poll was about 9.3% and the margins have come in at 9.2%. A good improvement on a year-on-year as well as on a quarter-on-quarter basis for Maruti. Now, from the press release, I'm just reading about the positive factors that led to this margin jump. One is better capacity utilization, a favorable foreign exchange variation. So there was a depreciation of the yen, and about 7 to 8% of the imports for Maruti are yen-denominated imports. Hence, the depreciation of the yen aided them in that sense. Apart from that, the company has said that they have taken certain cost reduction initiatives, and that has resulted in a better performance for them on the operational front. There's also the softening of commodity prices as well as a higher non-operating income that has aided to Maruti's numbers this time around. A couple of negative factors, actually just one that they've mentioned, higher advertising expenses. This is because of the slew of new launches that Maruti has had, especially on the SUV front, because of which they've had to incur higher advertising expenses. But if you look at the key reason for the improvement in margins is that there has been a significant fall in their material costs. So raw material costs for them as a percentage of net sales has gone down 160 basis points compared to Q1. Now material cost is just 76% of their net sales compared to 78% last quarter. So that's the key reason why the margin performance has improved for Maruti. The employee costs have also gone down as a percentage of sales, but that's not much. I mean, it's 4% of their total sales compared to 4.6% last quarter. So the fall in material costs is the big reason for the improvement in their numbers. numbers. Sales volumes, of course, have done very well. That's because, as Sumera was pointing out, it's a low base, as well as there was a lot of inventory stocking done ahead of the festive season at the dealer's end. Hence, the wholesale numbers looked much better. The key now for Maruti is to see how the new launches are faring, because they have a slew of new launches that are lined up over the next 12 months, especially in the SUV segment. They have a new Wagoner electric coming out as well. They have the Jimny, they have the new Bolero. So all of that, how does it really bode well with customers? And do they really penetrate the SUV segment? Those are some big questions. The management will be, of course, addressing the media very soon. But these are a good set of numbers. Strong volume growth is what we've seen. A good operational performance led by fallen raw material prices, the price hikes that the company undertook last quarter as well, and no complaints at all as far as Maruti is concerned.
Okay, Sonia, thanks very much for that. In fact, I think we have a couple of experts who are joining in. Prakash Diwan is with us. Hi, Prakash. I don't know if you heard Sonia reading out the numbers, but along expected lines, it's a strong showing by Maruti. Are you surprised that there are no surprises?
Sure, I like the way you put it. But, what's interesting about a normal set of numbers is that they've kind of digested all the issues related to raw material price hikes, which, of course, were accentuated in Q1. But that seems to be now way behind us. And also, interestingly, the kind of demand profile that they are handling, to be able to, augment supply with such limited constraints on the chips, shortage issues and all of that, I think they've done a commendable job. So I think the key metrics now which will keep on driving the stock further in terms of an upside is more of realization going up, the higher ticket premium vehicles being sold in the product mix, and them regaining market share. So I think these 2-3 critical things. Of course, we'll wait for the management's views on all of this, but I think those are going to be very heartening to hear from them after this set of numbers. Okay,
the management also says that the pending customer orders stand at 412,000 vehicles at the end of this quarter, out of which 130,000 vehicle pre-bookings are for recently launched models. So they're sitting on a huge pending order of over 412,000 vehicles, and that just goes to show that even the way forward will look pretty good. But Prakash, I wanted your thoughts on whether Maruti can get to double-digit margins in this fiscal itself, because their raw material cost as a percentage of sales has fallen significantly. On a year-on-year basis, it's down 390 basis points. And the indication is that there could be some more, benefits because of the falling RM prices. So what are you penciling in terms of earnings in the second half? Are you raising your earnings estimates, and hence would you raise your target price as well?
So, very, very important point that you raised, Ludhian, because not just the raw material price reduction that I talked about as compared to Q1, but their ability to be able to pass on higher prices with these new bookings. Remember, when you go out to book, the variants that are getting booked and which will get delivered are going to be the higher end ones. So from that perspective, realization is going to be a very key margin trigger for them. I wouldn't be surprised if they actually end up getting into the early teens by Q4, because you'll have a lull again coming through in terms of Q4 numbers, but in terms of demand, at least Q3, Q4 can be a bit big beyond the festive season. But Q4 is where probably, the margins do make a potential comeback. And on the stock, I think, the way it's consolidated so healthily at, those 86, 8,700 zones and then moved up strongly, my sense is we'll probably see very new orbits for this as the supply constraints get eased out and actual sales happen, the realization starts happening. So definitely it's right for a decent upside of at least 12 to 15% over the next 12 months, 6 to 12 months. But there could be some pleasant surprises as well along the way.
Okay. In fact, the stock is not too far away from its 52-week high. The 52-week high that it hit was 94.50. This was on 23rd of September this year. And the stock is now at 92.35. So it's very close to its 52-week high. Even if you look at the margin trajectory, right? I mean, this is a multi-quarter high as far as margins are concerned for Maruti. So just want to get a sense from you, I mean, the last time when we saw these 9% margins, in Q4 of FY22, of course, they did 9.1%. But before that, for a very long time, they were stuck in this range of around 5 to 8%. When do you think they can get back to double-digit margins, Prakash? And is the risk-reward still favorable now for the stock?
Oh, absolutely. So, let me first take the risk-reward part, answer that question first. Because right now, as I said, all the consolidation that the stock would have witnessed at sub 9,000 levels is done with. And you only have, improvements happening on all metrics, whether it's revenue, whether it's margins, whether it's, raw material price reduction, or eventually some new model launch which could change the trajectory at all. I think they're constrained because of the chip shortage. Otherwise, they would have already launched the Jimny, which is, in my view, a potential blockbuster because the gap it fills is unique. There's nobody else in that space, and they can actually kill the competition before it even comes up. So that's the kind of strength they have. So people will start seeing all of that come into the price. And that's exactly why your 52-week high will definitely get breached. The risk reward is certainly favorable. On the margins front, Sonia, I think the Q4 of FY23 is going to be the most critical. Whether they are able to supply high-end models, as I said, the product mix gets finer or refined as they go along. The waiting period is an advantage for them, but they need to deliver fast. Otherwise, people tend to be very fickle about bookings, and then people decide to move on to other models and other suppliers. So there's always an issue of that. If they can cater to this pent-up demand of 4 lakh plus vehicles that are booked with higher-end products, I think then they're home on that double-digit margin profile.
Okay, Prakash, thanks a lot for that. In fact, these are the highest margins that Maruti has reported since Q3 of FY21. So that means it's a 7-quarter high that Maruti is sitting on in terms of margins, and it's purely because raw material costs have come off. The management has also said that there are cost reduction efforts that they have undertaken, because of which the margins have improved. So good set of numbers coming through for Maruti, largely in line with expectations. So no major positive or negative surprise. But the good part is that volumes are picking up because demand has come back, and there is operational benefits as well. The stock, by the way, is not too far away from its 52-week high. Sumaira, back to you.
All right, Sonia, thanks for taking us through the numbers. We're going to take a very quick break, but we have our 2 experts waiting by to answer all your stock queries. We'll get to them on the other side. Stay tuned. Hi, welcome back. You're watching Your Stocks. Our 2 experts, Ruchit Jain of 5paisa.com and Shahina Mukadam, an independent market expert, are with us answering all our stock queries. So let's get to our next query, which comes in from Mumbai. Ketan Shah has written in to us. He says he has 100 shares of Shipping Corp bought at 116, plus he has 100 shares of Ambuja Cements bought at 545, and 50 shares of Tube Investment at 2680. Now he wants to know what is the future prospects of his 3-stock portfolio and what is the recommendation for him. Ruchit?
Yeah, hi. So I think all the 3 stocks technically are looking quite good from mid to long term perspective. Shipping Corporation has already seen a consolidation, and now if we look at last 2 or 3 weeks, then the volume have started picking up. So I think this should do well over a period of time, and 145 to 150 is the short to medium term targets which you can expect. On the other side, Ambuja Cement also, it's been witnessing some time-wise correction within an uptrend, but we have not seen any high volume sell-off of late. So I think even this stock could be held on. 480 should be the stop loss on the long positions, which is the lower end of the consolidation phase. And on the high side, 580, 570 should be the projected targets for the near term. And I think the third stock was, Sumaira, which was the third one?
SCI, Ambuja and Tube.
Yeah, so Tube Investments also have relatively done quite well. In fact, in last 2 or 3 months, what we have seen that the stock has not seen any price-wise correction. All the corrections have been more of a time-wise correction. So this stock could be held on, but it could show some time-wise correction in the short term. From a long-term perspective, 3200 is the target projections which the stock can achieve.
Okay, Shahina, what changes do you recommend?
No, I would suggest that all the 3 stocks, you could exit if you're looking at the shorter to medium term. Basically, I see all of them going into a consolidation phase. Take SCI first. SCI, the government has invited or is likely to invite financial bids. So it's like, a disinvestment on the cards. and they have already started the process of demerging the real estate business. Freight rates are coming off, so I think shipping corporation could see some bit of consolidation going forward from here. Same with Ambuja. Ambuja, the problem is less to do with fundamentals and more to do with 100% of the equity is pledged. So I term it as a very high risk stock, and the business is okay. I think valuations are a little bit on the higher side. So I would say the stock, that also stock will go into a consolidation phase. And so goes with tube investment. So I would suggest you should switch from here for all three if you're looking in the shorter or medium term.
Okay, up next we have Mr. Mahesh CH. He's on the line with us from Visakhapatnam. Hi sir, good afternoon. I believe you have investment in Emphasis. How can we help you?
Madam, I'm long-term investor, madam. I bought the Emphasis 100 quantity at 2,500 rupees.
Okay.
Now it is 1,930 rupees, madam. Shall I add more or we can exit and another IT company shifted to this?
Okay. Shahina, he is making losses, but he's a long-term investor. What is the probability that he could make his money back? Should he remain invested?
Yeah, I would suggest, after that huge correction that we saw, and also the investor has lost money. But I think from these levels, I think the stock will consolidate and should actually give him a decent return over a longer term. Maybe he can look at dips to add, but not right away. I think the guidance is pretty steady, 15 to 17% revenue growth, YY basis. Orders are strong, 1.3 billion orders on hand. So you can look to add at dips, not now.
Okay, Ruchit, what about you?
Well, frankly, the technical structure is not looking much positive, even on the weekly or the monthly charts. And within the IT space, if I compare it with the other stocks, then I think Infosys from the large cap IT names and KPIT Tech from the mid cap IT has much better potential than Emphasis over a period of time. So I think even if we look at even if the IT as a sector performs going ahead in next 1 or 2 years, then Infosys or KPIT Tech would show some relative a good outperformance over Emphasis. So my take here would be to take an exit from Emphasis and shift the same amount if he wants to remain within the IT space, then buy Infosys or KPIT Tech instead of this.
Okay, that's the advice on Emphasis. Up next, the query comes in from Anu Agarwal, who has written to us from Gurgaon. She has 500 shares of Asian Paints at about 3,100 odd. She's a short-term investor and wants to know if she should book her losses or she should stay invested. Ruchit?
So hold on as of now because the prices have already seen a correction from 3550 to 3050 now. Now the support for the stock is between 2950 to 3000. So we might see some more correction, but towards the 3000 mark, but the momentum readings are now into an oversold zone. So after testing that 2950, 3000, I think a bounce back again could be seen towards 3200, where again she can take a review.
Okay, and final query from Priyanshu Vagmare, who has written to us from Nasik. He has 500 shares of Manappuram Finance at 69 and another 150 shares of GR Infra at 1100. He's making gains in his investments and wants to know, should he remain invested or should he take his profits off the table? Shahina?
He should remain, in my view, invested in both the stocks. Manappuram, the stock has corrected, and at current levels, it looks pretty decent. And also, the investor has gotten at a good price. So I think he should hold in for some more upside. The stock had taken a beating because of poor numbers that had come out. Also, in terms of the tailwinds that it suffered with RBI putting more restrictions in terms of provisions for NBFCs. But I think things are stabilizing now, so he should continue holding. And GR infra projects, valuation is decent, strong balance sheet. The order book is very strong. It's almost 2 times, in fact, more than 2 times its current revenue. So I think valuation is not being too expensive. One can hold.
Okay, Ruchit, what would you recommend here?
And I would recommend to continue holding both the stocks. GR Infra, we have seen that already the prices have recently seen a correction. and any pullback move could take the stock back towards 1350, 1320 range. So one can review around those levels, but for at current levels, I would advise to continue to hold. Manappuram Finance, I think the buying price is quite good, so the margin of safety is quite good in this stock. No, considering the buy price, the support for the stock is now around 95 rupees. So we can hold on with the stop loss below 95 for a pullback move towards 112 to 115.
All right, Ruchit, Shahina, thank you very much to both of you for joining in to advise our viewers. With that, we're going to wind up on the show for now. Do stay tuned. The team of Closing Bell joins you next.